Let's talk a little bit about the consolidation, if you will, that could be happening within asset managers. There's been a ton of interest in this space, especially with talk of the U.S. opening this space in private investments to 401k investors. So will this lead to consolidation?
Well, thanks for having me on. Yeah, I mean, I think our report with Morgan Stanley has sort of two main angles. The first is we think there could be a wave of consolidation rolling through the asset management industry as the middle ground are under pressure from the rise of ETFs, the rise of privates, and quite frankly, the spend they need to make on AI. So that squeezed middle is looking to sell. And also the winner takes most dynamic that we see in many tech industries is coming to asset management. So I think that wave of consolidation is coming. But as you rightly say, one of the hotspots is around private markets for the wealthy. And one of the new statistics we've got today is arguing that there's been a 40% increase in semi-liquid funds, which are really for the wealthy for private markets. And we see real wind in the sails for this space. We can see this is probably one of the single biggest areas for growth. And as you say, bringing some of this into the 401k market over time might take a couple of years, but I certainly think for the wealthy, it's in our conversations, it's one of the most exciting opportunities in asset management.
Hugh, a lot of that is perhaps maybe a secular tailwind for that market for those wealthier individuals, because there are more wealthier individuals now because of the market dynamic over the last several years. If that is the case, what exactly then would be the, I guess, use case for some of these types of companies as they look to consolidate? What types of targets are they looking at instead of just saying, say, middle market? Are there specialties that some of these asset managers are going towards to cater to that growing high net worth market?
Which is a great question. Look, I think at the moment, the big interest is around specialist credit vehicles. And what you're seeing is both traditional firms try to buy in to get access to specialist credit managers, could be CLOs, could be mid-market private lending, could be investment grade, but also seeing partnerships. And you've seen a flurry of deals, whether it be Capital with KKR, Blackstone with Vanguard and Wellington, or Apollo with State Street, where firms are looking to partner to provide some of that ingredients to sell it and offer it to a more democratized level of clients. And the key point for us is it's really working. So this time last year, so in the first half of last year, about $1 in $10 raised by large private market firms came from the wealthy. This year, it's 1 in 6, and it's growing. So we see this as a really big opportunity set. And what's called an evergreen fund, so a semi-liquid fund, is probably the single fastest growing area of the asset management industry for credit.